IVM.
On this episode of Paisa Vaisa, I speak with Kamal Manocha, Chief Strategist at PMS AIF World. Kamal is going to tell our listeners what exactly is a PMS, what exactly is an AIF, and how do you choose one, assuming that you're the right investor for both these products. So don't go anywhere. This is the PMS AIF special on Paisa Vaisa.
Filter coffee is a fascinating beverage. You need to pick the right beans, blend them in the right proportion, roast them to perfection, and slow brew at the right temperature to get the perfect cup. Which is exactly like great conversations as well. You need to track down the most interesting minds, get them into their zone, and settle down for an unhurried, unscripted chat. And coffee for me is always best enjoyed with friends. I'm Karthik Nagarajan, and do share my table as I meet some of the most interesting people I know and sit them down for a strong cup of coffee and an even stronger conversation. Join me every Wednesday for a freshly brewed episode. This is not frappe. This is the Filter Coffee Podcast.
Folks, welcome to Paisa Vaisa. I'm your host Anupam Gupta, B50 on Twitter, and this is the PMS AIF World Special. It's a topic that we've discussed a bit in the past. We have had a few episodes on PMS, but today we're going to talk about PMS and AIFs. And if you're wondering what exactly is a PMS and what exactly is an AIF, well, we're going to tell you all about that in this episode. My guest is Kamal Manocha, Chief Strategist at PMS AIF World. Okay, this is a service that, let him explain everything about the service and the products to you. Kamal, welcome to Paisa Vaisa. Thank you so much for doing this for us. Let's start with your background, something about yourself, maybe your education and how you came to start this very, very different product, right? Because you're essentially a platform for people to choose a good PMS or a good AIF. So let's start from there.
Sure. Thanks, Anupam.
Thank you.
So, I am an MBA in finance, honors in economics, and I worked with Citibank for 10 years. So, I, throughout my career, have worked in the financial world, and there was a need for a lot of HNI and ultra HNI investors to be able to take informed investment decisions. So till now, what is happening, investors are making decisions more on the basis of their relationship with their banks, the wealth management firms, with the relationship managers. So, but what we see that over a period of time, more and more products have come. And when more and more products are there, there need to be some mechanism for them to take informed decisions. So we have taken a route where we are providing a lot of analytics, a lot of content, and content, which is a very super well written content, and maybe videos as well, for them to take informed decisions in the class of products, which is PMS and AIF products. Because PMS and AIF products are such products where substantial amount is invested. And hence, one needs to take an informed decision, because if informed decision is not taken and then, one gets stuck with a particular product and one realizes afterwards, it leads to bad experience. Bad experience leads to, not kind of, building trust. So from there, the, sorry thing starts. We do not want to, do not want investors to face that. And hence, for our investors that we are trying to acquire and that we are trying to manage for ourselves, we are offering them informed investments and offering them analytics and content-backed investments.
Right. So, Kamal, I noticed you said high net worth individual, right? So that's one thing that differentiates these products from your regular FDs or mutual funds or any other investment product, which is for the mass markets. Whereas a PMS, which stands for a portfolio management scheme, and an AIF, which is an alternative investment fund, are specifically aimed at the HNIs, right? The high net worth individuals. So now let's go into each of these products in detail. Okay, what exactly is a PMS, followed by what exactly is an AIF. I think PMS is something that we have done on Paisa Vaisa before, but just take us through what is a PMS product, just out of interest.
Sure. So first of all, PMS is portfolio management service, and portfolio management service is a service which an HNI investor kind of hires for him to create an equity stock portfolio where a particular demat account is opened in that investor's name, and that portfolio management service company has a philosophy basis which that portfolio is created and managed and taken ahead. So unlike a mutual fund which works on the concept of pool, as the name says mutual, so a lot of investors come with a mutual goal and they invest in a pool and they get units from that pool. Unlike that, in case of a PMS, it works on a mutual philosophy, but there are separate portfolios for each and every investors, and hence each and every investor has a different separate portfolio. The stocks, in terms of the name of stocks, could be same because philosophy is same, but everyone is holding their own stocks.
Sure.
So this is one first difference, which is one of the basic differences. How does it impact and matter in long term is as follows. So in case of a mutual fund, when someone invests and someone who invests gets units, there what happens that when, for example, mutual fund gets more flows, then the fund manager with those more flows buy more stocks.
Correct.
Right? In the same portfolio, someone who's invested earlier has units. For him, the average
Correct.
of the stocks goes not in his favor if the more flows are coming in the rising markets, and in rising markets more flows comes, right? So in case of a mutual fund, basically different types of behaviors of investors get collected and they reflect on a common portfolio. And there are different types of investors. Retail investors may have a shorter time horizon. An HNI investor would have a longer time horizon. Retail investor may have a lesser risk appetite. So, HNI investor may be more informed, would have a longer time horizon.
Correct.
So when everyone invests together, all behaviors are together, that definitely has a limitation.
Okay.
So unlike this, in case of a PMS, each and every investor has a separate portfolio. Someone invests today and his portfolio is created. So after 6 months, another investor is investing. For him, a portfolio is being created. It could be same stocks because philosophy is going to be same. However, that investment is not going to impact the averaging of the first investor's stock portfolio.
Okay.
This is one of the basic differences, which eventually in long term definitely impacts and creates a difference. Second thing is that in case of a mutual fund, because it is a retail product and it is regulated by SEBI, there are a lot of limitations in terms of categorization of stocks, in terms of number of stocks, in terms of allocation per stock, which leads to a very well diversified portfolio. Hence, mutual fund is considered to be a more diversified, conservative relative to a PMS.
PMS, yeah.
Right, so PMS is more concentrated, allocation per stocks are higher, and hence is meant for more informed, more high risk investors, investors who can afford to take higher risks. Yeah.
Okay, so we've covered the PMS part. We've got a basic idea of how it works and how it's fundamentally different from a mutual fund. Let's get into an AIF. What exactly is an AIF?
Sure. So, alternative investment fund comes in 3 categories. Category 1 is those funds which invest at the initial, I would say initial life stage of companies. Again, like we have 2 asset classes, equity and debt.
Correct.
In case of AIF, there are 3 categories, category 1, category 2, category 3. Each category has products in both equity as well as debt type of, products. So in case of category 1, the equity type products would invest at the venture level. So you can say startup funding, angel funding, venture capital fund. This is the equity oriented route in the unlisted space. This is category 1. Debt oriented route in category 1 are those products which would invest into infrastructure. So larger infrastructure projects for a country. So that is what is a debt side of category 1.
Okay.
Category 2 is basically when investment is done at the middle of a company's life cycle. So equity oriented in category 2 would be private equity funds which are investing for growth capital for in the middle of company's life journey.
Yeah.
Right. So it could be pre-IPO oriented investments. On debt side in category 2 would be lower credit quality, high credit risk oriented investments, which could be maybe structured finance, real estate oriented investments, or high low credit quality papers where the credit quality could be maybe lower than BBB, right? So hence the yield there is higher, but they are managed in more customized way. So in category 2, equity as well as debt are like this. Similarly in category 3, the equity side is long only, right, where most of the investments are like PMS only, but because the format is going to be AIF, it works, in those yardsticks. On the debt side, these are long-short funds. Long-short funds are those funds which are considered to be kind of a debt type because they balance the risk. So that's it.
Okay, so Kamal, you've explained how a PMS works and how it is different from a mutual fund. Can you just explain how the PMS is, or an AIF is different from a PMS? I mean, there is category 1, which, as you said, is, I think, early stage. Category 2, which is into larger projects. Category 3, which sounds like a hedge fund. So how is an AIF concept, let's just call it a concept, different from a PMS?
So AIF concept basically combines the good things of mutual fund as well as PMS. In case of a mutual fund, the good part is the operational ease, because mutual fund works on the pool concept. All the investors have same portfolio, they have units allocated, but because it is a retail product with ticket size lower than as low as 500 rupees, a lot of investors invest, and hence there are limitations. However, there are a lot of benefits of mutual funds in terms of operational ease because it works on the common pool.
Sure.
Right. So that aspect of mutual fund is available in case of an AIF also, because AIF also works on the basis of common pool. But the only good part is that in case of AIF, because minimum ticket size is 1 crore, and hence in case of AIF, all those investors who are coming are not retail investors. They are supposed to be high-end, sophisticated investors. Though they are coming for a mutual goal, but they are not going to be limited by their behavior, investment behavior.
Okay.
Right. The other part is that in case of a PMS, the good part of the PMS is that the portfolio is focused and concentrated, unlike mutual funds. This part of PMS is again available in AIF. Right, AIF is also focused, concentrated, not as diversified as mutual fund. So operational ease of mutual fund and focus of PMS, when you combine both, it becomes an alternate investment fund.
Okay, my last question before we go into the break, Kamal, would be just, now since we're covering the product features and we're talking in depth about that, can you just tell us about the range of costs in a PMS and the range of costs in an AIF? A mutual fund is fairly straightforward. We know what it is. There's either a direct fund or a regular fund. I understand that PMS has a slightly more different structure in terms of fees. There could be profit share, there could be flat fee. I have no idea about AIF. So could you just walk our listeners through the cost structure when you buy a PMS or when you invest in a PMS, and the cost structure when you invest in an AIF?
Sure. So when you invest into a PMS, as you rightly said, the costs are of two types: variable as well as fixed. In general, the fixed fee in case of a PMS would be 2.5%, and in case of a variable fee, it would be a fixed fee of say 1% or 1.5%, and then some profit sharing depending on hurdle rate, which would range from 8% to 10% to 12% to 15% depending upon how much was the fixed fee. Right. So, but broadly, for all types of performances, if you generally choose a fixed fee, the fee will be 2.5%. If you choose a variable fee, it would range from 2 to 2.5% eventually in total terms. Similarly, in case of an AIF, the fee starts from 2.5% as a flat fee, and for variable fee again, the ranges are similar. But in case of an AIF, there are different classes available. So because the ticket size is 1 crore, there are a lot of investors who invest even as high as 5 crore, 10 crore, 15 crore, 20 crore. So depending upon your corpus that you wanting to contribute, there are various classes that AIF follows. So class A, class B, class C. And as your ticket size keeps increasing, there are lower fee options available. But in general, I will tell you, even in case of AIF, the fee would be 2 to 2.5%.
Okay, understood. Folks, we're going to take a break at this point of time on our episode. On the other side, when we come back, we're going to talk about who exactly are PMS and AIF ideal for, and how do you choose a good PMS and AIF for you. Okay, don't go anywhere. We'll be right back.
Hey everybody, welcome to another awesome week on the IVM Podcast Network. If you're not following us on social media, please do. We're IVM Podcast at Twitter, Facebook, and Instagram. I'd also like to thank our sponsors on the network this week, Intel, Storytel, and Cambly. Check them out. They're a really good bunch of brands. This week, in the spirit of Christmas, instead of giving you the long, drawn-out promo that I normally do, all I'm going to do is ask you to give me a Christmas gift. Go to ivmpodcast.com/survey, fill out our survey, and send it out to us. We'd really appreciate it. And with that, let's get you back to your show.
And welcome back to the PMS and AIF special on Paisa Vaisa. My guest, Kamal Manocha, Chief Strategist at PMS AIF World. In the first part of this episode, we spoke about what exactly is the PMS, what exactly is an AIF, and how do they work. In this part, we're going to get to the meat of the discussion and what's in it for you. Namely, how do you choose a good PMS AIF and what kind of person are these products ideal for? So, second question first, Kamal. These seem to be slightly evolved products. It's not obviously meant for the masses, as you mentioned in the previous part of this recording. So, two questions for you. First is, like I said, what is the investor profile? What kind of a person should invest in a PMS? What kind of person should invest in an AIF? And then we'll get into the really detailed part, which is how do you choose a good product? Okay, so tell us about that.
Sure. So there are various, I would say, things that one needs to keep in mind before investing into a PMS to begin with. So someone, who has already invested in, for example, mutual funds, someone who has already traded in stocks or purchased equity stocks, who has basic understanding of what is investing. So that person, that is a given thing, that is basic requirement. And over and above that, one should have a time horizon of minimum 5 years. If you do not have basic understanding, if you do not have minimum horizon of 5 years, then PMS or AIF product does not make sense. Right. Over and above this, the minimum ticket size to invest into PMS is at present, 25 lakhs. But 1 month from now, from 1st January 2020, as per recent announcement from SEBI, it's already increased to 50 lakhs. So one can assume that the ticket size for PMS is 50 lakhs. And for AIF, it is 1 crore. And that could also go up. Right. So basic understanding, minimum time horizon of 5 years, and minimum investable corpus of 50 lakhs in PMS and 1 crore in AIF.
And just to clarify on that, 50 lakhs is a single check. Because some people might think that I'll give you 10 lakhs on January, 20 lakhs some other time. But I believe that in case of PMS, it has to be one single check of 50 lakhs.
Yes, absolutely.
That's how it works, right?
Absolutely, right. And to add to that, someone, who barely has, say, 75 lakhs of overall financial wealth, and one feels that one can, out of 75 lakhs, put 50 lakhs into a one PMS. That is also not a right thing to do. If you have a corpus or you are in that earnings, I would say, bracket that you are making, maybe 4 to 5 lakhs and over and above that per month, or you have a corpus which is upwards of 2 crores in terms of your financial wealth, then you can think of considering a PMS product. For an AIF, it has to be even higher. Because I will explain that theoretically, the allocation to one PMS or one AIF should not be more than 10% or 15% at max of your overall financial portfolio.
So from asset allocation perspective, you're saying at most you need to have 10 to 15% of your total portfolio into a PMS or an AIF, not higher than that. Okay, I mean, is there any reason why you say that? I mean, some people would say that मुझे risk लेना है life में. I want to increase it further. So, is there any reasoning behind the 10 to 15%?
So, someone who says मुझे risk लेना है and he has understanding of risk, so he can increase for that person. It could be, if not 15%, maybe 20%, or it could be higher than that.
As long as he understands the product.
Correct. And but in general, someone has a 1 crore financial wealth. He wants to take risk and he thinks that he can put 50 lakhs, which is 50% into a PMS. He has to decide that.
Sure.
The fact is, it is going to be locked. Time horizon has to be minimum 5 years, and it is a concentrated portfolio. It could be possible that during that 5-year period, that 50 lakhs drops to 25 lakhs. If he does not have that understanding, that does not have that attitude, he may, come into some kind of stress. He may exit at wrong time, and then it would lead to a bad experience.
Sure. So, Kamal, I have two questions for you before we go into the selection process and the selection criteria. The first question is that in mutual funds is quite transparent. Whenever I want to see the NAV, I can just log on to the AMC's website or have a service like a value research online or whatever. I mean, NAVs are available literally every day and they're easy to track over a period of time. So the first question would be, how do you track the value of a PMS, right? And the second would be, how many of these products are there in the market? Like,
sure.
We know for mutual funds, I believe there are thousands of schemes out there. Just an idea about how many PMSs are out there, how many AIFs are out there. So first, like I said, how do I track the value?
Sure. So first of all, just to clarify, the transparency in case of PMS is also equally good. In fact, it is all the more. Because in case of a PMS, you get to even see what are your underlying holdings. right? In case of a PMS, you have to go to some kind of a platform like Value Research to find out a general fact sheet. But what is happening in your portfolio day to day, you will not get to know that. You only get to know the end result, which is NAV. In case of a PMS, you get to know your value as well as underlying holdings. You get an online password and you can track what is happening.
Sure.
In fact, if any stock is sold by a PMS manager in your demat account, you get an SMS of that, right? So it's as transparent as that. So transparency wise, I would say PMS is as equal as mutual fund, if not higher.
Okay.
Right? In case of an AIF, because again, it works like a mutual fund, it works like a pool. One does not, get to know on day-to-day basis what is happening, but, one gets a monthly statement. So in terms of communication, in terms of, I would say transparency, all these AIF companies are all very professional. If one needs a statement at any point of time, they are made available.
Okay.
And so, in terms of total licensed players, there would be more than, I would say, 500 players who would have PMS license, more than 300 players who would have AIF license. But, if we stick to the popular schemes, stick to those schemes which have been able to show some performance, there would be around 100 schemes in case of PMS and could be around 25 schemes in case of AIFs.
Okay, great. Now we come to the main topic, the main decision-making point for our listeners. How do you choose a good PMS for yourself and how do you choose a good AIF for yourself?
Sure. So first of all, let's come to PMS, right? So I'm assuming that you have a time horizon of 5 years. I'm assuming that you have a fair basic understanding of what is equity market, what are equity shares, what are the risks involved, and then you after all this understanding want to know and want to invest into a PMS product, and you are quite comfortable by allocating 15-20%, max 25% of your financial wealth, which comes to 50 lakhs. Now, with this basic understanding, there are 3 categories in case of a PMS: large cap, multi cap, small and mid cap. Large cap are those companies which are investing in top 100 market cap companies. Mid caps below top 100, sure, and they go up to 250th company in terms of market cap, and small caps are even lower than that. Now, when it comes to investing, you have to understand what is your time horizon. Time horizon is the basic yardstick. If your time horizon is not 5 to 7 years, then you should not invest into mid caps for sure. You need to have a 5 to 7 year horizon to be able to even think of considering a PMS product in the mid or small cap space.
Okay.
Why I'm starting from mid and small cap first? Because that is the space which generates highest returns when you go back and you see your returns in the hindsight in long term.
Okay.
Right, but the fact is, to make that return, you need to see 5-7 years of tough time. Right. So just by going by performance, you decision cannot be taken.
Okay.
You should analyze on your own that after the basics that I have, if I do not have a time horizon of 5 to 7 years, I cannot even think of mid and small cap PMS. Sure. Right. Now, then if your time horizon is say around 5 years, then there are 2 options: large cap as well as multi cap. A large cap portfolio would generally invest into those companies which are already evolved companies. Relatively, the value of those companies are less volatile, and hence the fluctuation is less, and hence the risk is relatively lower. So it depends upon your attitude to risk, and if you take lower risk, your expectation of return has to be also lower. Right? So if you are targeting around 12 to 14-15% kind of return per annum with the horizon of 5 years, and your attitude to risk is lower, hence you go for large caps. But if you can tolerate more risk, around time horizon is around 5 years, you can go for multi-cap also, because multi-cap would have some element of small and mid-cap companies. Around 60% will be large cap,
okay,
and around 35-40% will be small and mid-caps.
Okay. Coming to an AIF, how do I choose that? It seems to be a little bit more complicated than a PMS.
Right. So if your portfolio, financial portfolio is not, I would say 8 to 10 crores, first of all, to begin with, you do not need to even consider AIF product, because as I said, going by the mathematics of allocating around 10 to 20% to a particular product, you need to keep that in mind, right? So if that basic thing you have, so if your portfolio is say 8 crores to 100 crores, then you are an ideal investor to consider AIF product.
Okay.
Now within AIF product, you need to understand that, as I said, the 3 categories of products. Broadly, you want to invest into a listed space or an unlisted space. In general, if you're wanting to invest into a listed space, then you would already have a lot of options in your portfolio, right? You would have exposure to mutual funds, you would have exposure to direct shares, you would have exposure to PMSs. So going to an AIF through, if you're looking for a listed space and going to an AIF, again, would make lesser sense. But again, there are options available. You can select a fund manager and you can select a portfolio manager. If you find credibility there, you can go.
Sure.
But most likely, at the if you're choosing the first AIF product for yourself, and especially you're wanting to get exposure to AIF product, your inclination will be more towards an unlisted space, because you already have exposure to listed space in your portfolio. Now within unlisted space, it is category 1 and category 2. So you need to understand that in the unlisted space, one, there is illiquidity. Second, the taxation is going to be complicated and not very favorable. And hence, you need to understand that, whether I want to go with equity oriented or debt oriented, right? So accordingly, if you want to go to equity oriented, then you can invest into a private equity fund, which is category 2, pre-IPO type fund, category 2. If you want to, or you can go into a venture equity fund or angel equity fund, which is category 1. Okay. Or you could invest into if you're looking for a debt oriented thing, you could go for in category 1 infrastructure oriented project or oriented investment, or in category 2 you could go for a high credit oriented portfolio, which is a real estate oriented investment.
Okay, so all these products are out there. So Kamal, last part of the show. Okay, tell us something about PMS AIF World, the services that it offers, because obviously you've walked our listeners through how to choose a good AIF or a PMS. I'm sure that you also do this actively in terms of advice. So tell us a few things about PMS AIF World. When was it formed? What is the website? How can listeners reach out to you? What is the content that you offer? What other services that you offer?
Sure. So PMS AIF World is, a website for PMS and AIF investors. Investors who are looking to invest in this space, need to go through a lot of factors for them to ultimately come to a conclusion that they should invest into PMS or AIF product, and within that category, which is the product that suits them. So for that, we offer them, first of all, QRP analysis, wherein which we understand their existing portfolio, because their existing portfolio is extremely important. Someone who does not have an existing portfolio is not an ideal customer of PMS AIF World, because we do not want anyone to directly go and invest into a PMS product, right? As I said in my basic requirement. So assuming that someone has a basic, portfolio, we first offer QRP analysis, which is quality risk performance analysis. We would want to understand, where he stands, basis which we can allocate, a particular idea which would suit his existing portfolio, right? And in that regards, the second service that we offer is 4P analysis, where we do analysis of all the PMS and AIF products across 4 Ps, which is philosophy, portfolio, performance, and price. Right, so we study all this entire space of alternatives across these 4 factors. We have understanding of investors' current portfolio. We have done the QRP analysis. We have an understanding of all these products across 4P analysis, and hence we match and we are able to give him a right recommendation. Okay. So this is core thing that we do for our investors. Now, for an investor to take a decision and allocate larger corpus of his hard-earned money, it's not that just basis QRP and 4P analysis he can do. We make available quality content in terms of interviews of fund managers. All those are available on our YouTube channel. We publish quarterly newsletter where a lot of articles are given. So written as well as audio video content is made available for the investors to make informed investment decision. Apart from this, we host monthly webinar with a reputed fund manager on the current market environment for our investors to take right decision. Okay. So these are all the services that we do to ultimately ensure that all these AIF and PMS aspirant investors take informed investment decisions.
Fantastic. Folks, the website is pms-aifworld.com.
pms-aif.com.
That's pms-aif.com. I was talking with Kamal Manocha, the Chief Strategist at PMS AIF World. I hope that was useful for you. Kamal, thank you so much for taking the time out and coming and doing this recording for us. Folks, that is a wrap on this episode of Paisa Vaisa.
No material on the show should be considered as financial advice. The material on the show is for informational purposes only. Please consult a financial advisor before taking any investment decision.
Welcome to Peak Planet, a new podcast where we delve into the fallouts of the growth path that we and indeed much of the world has chosen. Sustainable growth is the buzzword. Until we nail that down, we need to ensure that we keep our population healthy and also have the resources for our increasingly urban lifestyles. I'm Karthik Ganesan, a researcher at the Council on Energy, Environment and Water, a Delhi-based policy research institute where for almost a decade we've been trying to explain and change the use, reuse and misuse of our resources. In the first season of Peak Planet, we take up air pollution, public enemy number 1 and an invisible one at that. Increasingly, the most important risk factor for adverse health outcomes, air pollution has become the most unwanted byproduct for an aggressively growing economy. Over 4 episodes, we find out how prepared our systems are to deal with this crisis. You can catch the entire first season of Peak Planet out now on the IVM Podcasts app or website, or wherever you get your podcast from.
Do you wish you were smarter? Well, so do we. But the next best thing?
We could make you sound smarter.
And to help you with this endeavor, we are Simplified, a podcast that attempts to break down the complex world around you with a little knowledge, a lot of poor jokes, and a ton of random trivia.
Episodes out every Monday
On the IVM Podcast app or wherever you get your podcasts.
See ya!